Price increases, according to Buffett, are frightening. We find it intriguing that prices are rising. As a result, our prices are rising. People are becoming used to it, and it is no longer a deal breaker when it comes to developing houses. Manufactured dwellings and enterprises are the most common in the nation, and we now have 9 of them. As a result, despite rising costs, the United States continues to develop a large number of houses. People, on the other hand, must defend themselves against this terrifying inflation. We'll go through what Warren Buffett suggests you can do to shield yourself from the negative consequences of this fast-moving disaster. But before we go any further, please give this video a thumbs up. And if you want to watch more of our movies, don't be afraid to click the subscribe and bell button to view more of our money and investment videos. Without further ado, let's get started. Warren Buffett's exemplification. Let us begin with a Warren Buffett example. He said that if the United Auto Workers negotiate a 3-year contract, we would get a 3-year contract. However, whether you purchase a bargain from General Motors or anyone else, the price will continue to rise. That is, the economy is approaching its lowest moment, which no one predicted. The epidemic decimated all of our enterprises, even the furniture stores, since we didn't know when we'd be able to return to work. He saw that these enterprises were shuttered for an average of 6 weeks, with no idea what would happen next. But the pile became larger and larger. Warren Buffett and many others expected it to fade away when the $600 payments ended, but it merely grew larger and bigger until it reached $1 billion. Warren Buffett received the figures in August of last year. Week by week, he or Irvin Blumkin will call to discuss what's happening in 3 distinct businesses in Chicago, Kansas City, and Dallas. When people have more money to spend, they tend to pay more. The April business pricing hike has already been announced, so you're aware that it will occur in roughly a month. Simply said, prices are rising. Anything is almost like a shopping frenzy, except in certain areas where you can still purchase things despite the messed up supply lines. You understand that you cannot afford to go across the globe because money is being transferred from one section of the market to another. As a result, the majority of individuals have more money to spend than they would otherwise. You are aware that many individuals are in dire straits between now and then. Dairy Queen's original stores, on the other hand, are now quite renowned, and its takeout locations often have unique spins on these staples. However, the firm is not currently susceptible to pricing adjustments. Most individuals did not anticipate this level of inflation 6 months ago. Inflation would have far-reaching consequences, and taking money from the rest of the globe is just the beginning. It would be quite human for politicians in the future to decide that they would rather repay the rest of the world in dollars worth a lot less than the dollars they borrowed. This is particularly true considering that our nation has laws aimed at boosting items that aid companies, which is certain to generate inflation. People are incurring a lot of external debt, and this is the most common strategy to mitigate the effects and expenses of that debt. It's amazing to hear politicians suggest that since the money is already there, it's okay to spend it on things like AIG payouts. In the United States, no taxes have been increased, so citizens pay the same amount they paid a few years ago. In reality, the government's revenue this year is more likely to be $2.3 trillion rather than $2.6 trillion. Investing will most likely pay for the things we do today. Much of it comes from the United States government. When it comes time to pay in their assets, they will discover that their purchasing value has plummeted significantly, with those who cash in their bonds decades from now having lost the greatest purchasing power owing to inflation. This covers those who hold bonds issued by the United States government. When you mention user instead of Chinese, the cost seems to be more manageable. It's a strange scenario to be in, since news headlines about a number of taxpayers come out every day, yet neither Yoon nor Warren Buffett's tax rates have increased. So far, taxpayers have not had to pay anything. And Warren Buffett believes that a large portion of the cost will be reimbursed by a future reduction in the value of fixed dollar assets. We have greater levels of inflation right now because it is simple and logical. Making money for yourself is the greatest strategy to protect yourself against inflation. Whatever you're excellent at, if you're the greatest at it, you'll earn a cut of other people's goods and services, regardless of how much money they spend. Whatever it is, whether a pebble, a dime, or $100. To summarize, nothing beats being able to generate money on your own, regardless of how much money the national currency can purchase in comparison to a standard. If you are the top reporter in your region, you will be generously compensated. Offering subpar protection is an excellent way to generate money. If you operate a firm that utilizes the Coca-Cola brand, you understand that it makes no difference if you hire a particular amount of people to work on your product in 20 or 50 years. People are now ready to labor an extra 3 or 5 minutes for an additional 12 ounces of a desired product. The pricing level has shifted as a result of this. The capacity to earn money is the most crucial factor, but so is the opportunity to create money in a fantastic company that does not need a large initial investment. Warren Buffett suggests that you spend your money to increase your own talents and knowledge instead, because to the high initial cost and the reality that you would lose money over time due to inflation. Stocks are dirt cheap right now if you do the arithmetic and use today's interest rate to discount back. Instead of investing in bonds, the young guy would be wise to pursue a career as a doctor. We've never seen what it looks like to dump money on the pretext that it's for economic reasons. However, based on the yield curve, we know what interest rates will be in 30 years, and it's an exciting moment. Following a monetary policy with interest rates close to zero is simple, but when it comes to economics, you should never say never. On March 9, 2022, the president said that 8 out of every 10 Americans will get a $14,000 check. We predicted 2 years ago that 40% of Americans couldn't locate $400 in cash. We distributed those monies to 85% of the individuals today, and no negative remarks were made. People who receive money are happier than those who give it out. Nonetheless, stock prices have risen, companies have expanded, and voters are pleased. However, in business and the economy, there are always unanticipated repercussions, which is why Google and Apple have such high returns on capital. They don't need a lot of money to get started, and they bring in a consistent quantity of money. If you want to give the federal government additional money, Warren Buffett owns $100 billion in bonds that generate between $30 and $40 million every year. The heat is on, which is precisely what the economic leaders want. However, everything is dependent on how the short-term increases go. They are bringing the nation to the brink of collapse, just as they are doing in Europe. We are assisting them with economic strategy, so everyone is delighted. People will ultimately cease paying attention to trillions and consider 1400 as an error. Whatever occurs, we'll see what happens. However, both Charlie and Warren Buffett agree that this is the most intriguing narrative they've ever heard. Non-economists and those who know a lot about economics, on the other hand, have never seen anything like this. What happened to the professional economist reminds me of what Winston Churchill said about Clement Attlee. He was a very modest guy with a lot to be humble about. They were so confident of themselves, but they soon discovered that the actual world is much more difficult than they had imagined. Keynes has long maintained that the greatest approach to defend against inflation and get the most of your money is to develop your own talents and earning potential. This is because inflation is like an invisible tax that only one person in a million is aware of. Few individuals make the most of their abilities, and you cannot be penalized for improving. They have the power to take it away from you. If you can make yourself more helpful in your hobbies and career, whether it's medical, law, or anything else, that's the greatest strategy to shield yourself from rapidly depreciating money and the best passive investment. Finally, Warren Buffett believes it is a solid business. Owning equity in a successful firm is an excellent strategy to hedge against currency fluctuations. But it's insane to consider that when Warren Buffett was born, the US dollar was worth 94 cents and is now only worth 6 cents. People who base their life on fixed exchange rates are severely impacted by inflation. Even with substantial inflation, it is feasible to make ends meet. For example, if we had known before we were born that $1 notes would only be worth 6 cents, we could have begged to be sent back in time. We don't want to live in a world like this, but because everything seems to be going well, we can't really complain. Overall, you should begin investing in your abilities now so that when the recession worsens, you won't have to worry too much since, with the correct mind and aptitude, you'll be able to simply exit it. That's all we've got today. We appreciate your interest and hope you learned something new. If you like it, please give us a thumbs up. And if you'd like to see more of our videos, please click the subscribe and bell button to be alerted when we release new ones. If you have anything to say about this video, please do so. Apart than that, thank you for viewing, and we'll see you in our future video.